Welcome back to Mountain Minds Monday, a program of Tahoe Silicon Mountain. I'd like to thank our sponsors for the event, our gold sponsor, Holland & Hart, where next month you'll see some little circles with R's in them because we just got our registered trademark, so thank you for help with that. Our silver sponsor, Mobo Law, and all of our community sponsors. There's so many folks who help us make this happen. DLL Technology, Nevada County Tech Connection, who's helping with the live stream, the town of Truckee, the airport district, the Lyft co-work space that sponsors some of our monthly events, Pizza on the Hill, who graciously hosts us here, and the Truckee Roundhouse, also a community partner. If you'd like to join them, the link to become a sponsor of Tahoe Silicon Mountain, or specifically the Mountain Minds Monday event. As you heard before, this has been going for 9 years, and we want to keep it going strong, so ask me afterwards if you'd like to become a sponsor. Thank you also to our individual sponsors. So you have the ability to be an individual sponsor of the Mountain Minds Monday event for just $150 per year. Includes your entry to all of the events and beer or wine or sodas at the events, and you can skip the line. So this is the link to become an individual sponsor. So on to the main event tonight. I'm really excited to introduce to you Dave Sick, who has been a friend here for many years. He is CTO and co-founder of Stomp Sessions, but has quite a history before that. He actually started off working for a VC down in the Bay Area. When he came up here, he worked for Booth Creek, part of Vail. Then he was part of the startup stage of Clear Capital. And then he was a solopreneur, and tonight he's going to be talking to you about his experience as a co-founder, and specifically about raising money in Tahoe. So with that, I will hand it off to Dave.
Well, I've been coming to Silicon Mountain for quite a while, and it's kind of finally fun to share a little knowledge that I have about raising money in Tahoe. I'm going to share some of my experiences recently and some of my experiences earlier on in my career. Just going to walk through what I'm going to talk about tonight. Going to give you a little more detail and background about me, and then talk about some of the things you should do before you start raising capital for your startup. You can't just go from idea right into getting some cash. And then talk about a couple of different funding options that I'm familiar with, and what are some of the companies that fit within those parameters. And then I'll have some Q&A. Feel free to ask any questions as I'm going through. I'll take them as they come. So, I'm not Elon Musk, founder of several billion-dollar companies. I'm not Jeff Bezos, although we both have raised some angel capital for our startups. I'm not Dr. Evil, out to conquer the world for evil wishes and doings. I'm just a tech guy in Tahoe. I've been in tech for about 24 years, originally down in the Bay Area, kind of during the dot-com boom one. I've done everything from sort of software development to product management, some marketing. Moved here about 12 years ago and worked for Booth Creek, which owned North Star and 6 resorts at the time. Spent some time at Clear Capital when they were about 30 people, and they grew to about 400. I went out on my own and did some independent consulting, building web and mobile apps. Started in a little side business, and now most recently, with these two smart guys over there, started Stomp Sessions, a mobile platform for lessons and guiding in outdoor sports. I have a family with a couple of kids in the school district. We love to snowboard and ride bikes. I'm a bit of a soccer fanatic, like Manchester City. They just won the Premier League, so pretty happy about that. And I'm into sci-fi, and I've been watching way too many Marvel movies lately. And one of the perspectives I bring is I've been on both sides of the table. As Ellen mentioned, when I moved out to the Bay Area in the mid-90s, I actually worked for a venture capital firm where I was leading due diligence both with the startup pitches as well as with technology. And if you can look at the numbers there, over a 3-year period, read about 2,500 business plans. Of those, only 500 or so made it to pitches, and of those, we only invested in 5 companies. So VC is a pretty tough source to get funded in, and we'll talk more about that later. I talked about my startup side. I've pretty much only worked in startups, aside from Booth Creek, although that was somewhat of a startup, sold to Vail. But I've been 3 as an employee and 3 as a founder, 2 which were self-funded, and my current one has been angel-funded. So why do we like startups? We hear in the media all the glory. You got the billionaires list. You're going to be the next person next to Bill Gates and Warren Buffett. Make a lot of money. You're going to be your own entrepreneur. You're going to set the culture. You're going to work on the beach, kick your feet up, and watch your money grow. And for me personally, I really like to use my brain and come up with creative ideas. We all have these different brainstorms and different ideas that we bring to the table, and it's really fun to put them to work. However, the odds are not with you. Only about 1 in 10 actually are successful. And really, when you're coming up with some new idea that's changing the world, everything you're doing is new. You might have patterns that you read about. You might have blogs and things that will help you with your product development and your marketing, but no one's out there steering the rudder for you or giving you advice. Every decision you make is new and your own, and you don't know whether it's right. And that's a situation that creates a lot of uncertainty. And if you're not comfortable with uncertainty or the stress that comes with a startup, it can be a really challenging thing. If you look at the bottom here, the average time horizon to get money back on a startup is 10 years. A little over 10 years ago, one of my good friends was sitting in a cubicle in the Bay Area next to this guy, Travis Kalanick, I think is how you pronounce his name. He was working on this little app called Uber. And it just went public this last week, but that was 11 years ago. So even the ones that have been in the media, really successful for a long period of time, it still takes a long time to go public or get a return. So that said, we all have great ideas, and if you really believe that your idea is worth pursuing, you're ready to tackle the challenges and the stress, you think you're going to beat the odds, well, let's figure out how to do that. So the very first step from taking your idea before you start working and spending a lot of money on it is you should validate that it's worth pursuing. A lot of ideas are great in your mind, great on paper, but you really need to know if someone's actually going to buy it. And I have a few little icons here. I really encourage you to read The Lean Startup by Eric Ries. It's a great book that talks about how to validate your idea in a really cost-effective, efficient way. And here are a few highlights from that book. The very first thing he suggests is interviewing 100 people. Sounds like a lot, but it's really well worth your time. And this is not interviewing your mom who's going to think every idea that you're working on is great. It's going out and trying to find your target market and interviewing people, and you'll be surprised at how much feedback you get and how that can really shape and improve your idea and the way you're going to go after that idea. One of the other concepts he has in here is the MVP product. And so MVP is not most valuable player, it's your minimum viable product. So what is the most simple way you can build or provide a service to test out your idea? It can be as simple as putting up a web page with an email sign-up form that describes what you're going to offer and say, hey, do you want to know when I finally finish this? Or you could have a food product that you sell at a farmer's market, or some lotion that you sell at a trade show or a fair. Different ways to sort of provide a small portion of your product to get out in front of people. And really, the biggest proof is someone going to give you their hard-earned cash for your product. And getting one person to buy it is one thing, getting 10 is another, 100, now you may be onto something. It's surprisingly hard to get people you don't know, who've never heard about you, to believe and have faith and buy what you're offering. So that's really one of the important steps there. Another way you can get some validation is if you're offering a product in an industry, are there partners or advisors you have in that industry who can vouch for you and think that that's a really good idea? Have you convinced one or two other people to join you on this crazy journey? So it's really important as your very first step to get this sort of validation. There's a couple of other resources here. There's this organization called 1 Million Cups. It's kind of around getting a cup of coffee and talking to someone about it. But they're down in Reno, and you can sign up to present and get feedback on your idea. And it can literally be at the idea stage. Once you get approved by 1 Million Cups, you can go every 6 months, or you can go to different cities to get some validation. We're really lucky in Truckee that we have the SBDC and the Sierra Business Council, who have a program that I think they mentioned, the Pitch Clinic. That would be a great process to go through to get your idea validated and go through some of the research and vetting of your idea. Okay, so another context point you need to set is what are your financial goals? We're not all out to create the next SpaceX or Amazon. Maybe you just have a side project that you're really passionate about, that you want to make a little income from, or you just want to test out. That's fine. Maybe you're looking to replace your current job and replace that income so that you're solely doing this, whether it's consulting or another product. Maybe you're trying to create a small business that you think can grow or service Truckee, Tahoe, maybe the greater region. Or you may be going big, shooting for the fences and trying to really disrupt an industry. So, how much money should you raise? Well, in the prior slide, you've kind of set the context of how big you want to go. And in this process, in order to make this decision, you really need to do the analysis and kind of develop your financial model or your high-level business plan. This doesn't need to be some crazy book that goes from beginning to end. It's really just a spreadsheet that has some of your key assumptions. What's the size of your market? How many people are going to buy your product? What are you going to spend on marketing? What do you need to spend to build your product? And what are those key milestones that you want to hit? And to do that, you're going to have an amount of capital that you need to raise in order for you to reach each one of those little milestones. And my personal opinion, and what I've read a lot recently, is that ideally you want to get 18 to 24 months worth of capital. This allows you to build your product, get some validation out in the market, test your customer acquisition strategies, and keep you from having to go back and raise more money, which is going to keep you from actually working on your product. So I really, when you go raise the money, or you have some certain milestones you want to reach, make sure you go after enough capital so that you're going to reach those milestones. A lot of companies fail just because they haven't gone out and raised enough money to get them to make enough progress and hit those milestones. All right, so you've got your idea, you know how much money you want to raise, and now you're ready to pitch. But before you pitch, you got to get your assets and your data, your messaging all together. So just to note, in the back of this presentation, which I think will be accessible, I have a bunch of different resources that you can use. One of them is there's a site that has all the pitch decks of basically every major startup that you've heard of. This is Airbnb. They have all sorts of ones out there. But your pitch deck needs to be a very concise presentation. That should take no more than 15 minutes because typically your first meeting you're going to get a half hour at a time, and you need to be able to convey your product and how you're going to go to market and have time to answer questions. One of the really important parts of this is to do your market research. People want to know that the market you're going after is big enough, and you need to know what slice you're getting in that market and how you're going to attract those customers. Once you have your pitch and your data ready, you need a salient, short, brief email that you can send out to your prospective investors. One of the things that's really important with both your pitch deck and your email is that you get a bunch of eyes on it. You can turn off an investor with a spelling mistake, punctuation problems, all these little things, and you might not get that chance again, and it might shut off a whole network of other people by not having a really quality product. And then finally, before you go out, it's really healthy to go think through what are the questions that they're going to ask you. What would you ask yourself? Why would this be challenging? Or what are some holes in your presentation? As you start giving these pitches, you're going to get new questions, and you should really try to incorporate those questions into your pitch deck so that those questions aren't even asked, and they're trying to figure out how to invest in your company versus how to turn you down. All right. So you've done your research, you've got your pitch deck ready, now you're ready to go out in the world. Well, congratulations. You guys are already here at Silicon Mountain tonight, networking with people. There's lots of places in the Tahoe area where you can go find different types of investors. Silicon Mountain is one. You've got the Chamber. We actually met our very first investor for Stomp at Good Morning Truckee. There's one tomorrow morning. Your investor might be there. The Rotary Club, really good network of people. You've got your co-working spaces. And you've got 1 million cups, and you can't see this sort of black logo down here, but there's EDON, which is the Economic Development of Western Nevada, but they're basically the entity in Reno that's responsible for getting Tesla, Apple, and a ton of other companies that you probably haven't heard of, but are making Reno grow. And they have a lot of different organizations that are helping fund a lot of the growth in Reno, and they're going to be one to look out for. When you do go network and meet people, definitely connect with them on LinkedIn right afterwards. It's really helpful as it builds your network, but when you're trying to meet someone else, quite often there's a connection that you've made in the past, and you can make that connection because you can see that they're friends with one of your contacts, and it's really an invaluable resource in networking. All right. So you've done your networking. You've got some people to say yes. And now you probably before you get to that final step, you need to decide what type of financing you want to go after. So there's a myriad of options, but here are some of the most common ones. So the first one is a loan, and a loan is where someone gives you money, and you have a certain time period, 1, 2, 3, 4, 5 years, and you give them back their money with interest. One of the benefits of using a loan is you don't lose ownership in your company. One of the challenges is you've got to pay that back in a timely manner, and if you spend it and you're not successful, you're on the hook for that loan. This is really good for maybe companies that have an established revenue stream and know what they are bringing in and can afford to pay out, but it's not for everyone. The one that you're probably most familiar with in the media is equity, and so this is where someone gives you money, and for that they then own a portion of your company. So they could give you $1,000 and your company is valued at $10,000, so they have 1/10 of your company. That's an equity investment. Another really common approach for startups that's used down in the Bay Area a lot is called a convertible note. So quite often when you start a company, you don't know what you should value your company. It's just an idea. You've got people, the potential is really big, but on day one, you essentially have just an idea. And a convertible note is sort of the solution to that. So this is kind of a combination of a loan and equity. And so what a convertible note is where you get a loan investment. So you have a time horizon, typically 2 years, where you have to pay interest on that at the end of 2 years. If you don't get another investment that then would turn this into equity. So let's say someone invests $100, and at the end of 2 years, you've made some progress. People really like your business, and now you get another investment of, let's say, $1,000. Now your company is worth $1,000, and that $100 at the beginning of time is now 1/10 of your company plus the little bit of interest. And so this allows you to get some money, use it, make some progress, and then you can have a valuation 1 or 2 years down the road. Any questions on that? Okay. So now I'm going to talk about some different funding sources. I'm going to focus on the ones over here in the green: bootstrapping, crowdfunding, friends and family, angels, accelerator incubators, and venture capital. There's a whole slew of other options that I'm not going to go into because I don't have a ton of experience with, but you just should know that there's a lot of options out there. So, bootstrap, personally finance. This is typically where everyone starts, and you're carrying the heavy load. It's a good fit with early stage businesses. To just sort of describe it, you're footing the bill for all costs. It's good if you want control. If you have all the resources you need to build your product, so you don't need to hire people, maybe you're a programmer or you're someone who can sew and make your clothes, and you're still validating the idea. I really encourage everyone to start here. It allows you to sort of push yourself and find some creativity to make some progress. One recommendation I got a long time ago is people can get into a lot of trouble. You spend $100 here, $200 there, $500 here. Next thing you know, you've spent a lot of money. So you should, if you've done your research and know how much money you're raising, set a limit. Whether it's $100, $1,000 or more, set that limit and stick with it. And when you reach the end of what you've spent, reassess and see what options you want to pursue. You could, go back to the well, but I would encourage you, if you were not comfortable before, investing more than a certain amount, that you stop and look at some of these other alternatives I'm going to walk through. So crowdfunding. This is something new in the last 10 years, started by IndieGoGo and Kickstarter. This is a great way to raise additional money, especially for physical products, so things that you make and can sell to people, like cameras and all sorts of different things. It's really good if you've got a prototype developed so that people can actually look and feel and see what they're buying. It works well if you have a good story. You can create good videos. And this is another way that you can retain equity and retain ownership. About 30% of companies that post an idea on IndieGoGo or Kickstarter actually raise their money. They raise, on average, $1,000 to $10,000. There are many instances where they've raised hundreds or even millions of dollars, but those are sort of exceptions. So I think if you're building sort of a physical product, or you want to build 50 or 100 of your different types of products or services, this is a good place to start. And there's lots of resources on IndieGoGo and Kickstarter. Friends and family. It is what it sounds like. These are the people you know. So you have some established credibility. It's good for your early stage. It's highly dependent on your network. Jeff Bezos raised his first $500,000 with his friends and family. They were really happy about that decision. But these are your friends and family. And if you remember way back on slide 1, only 10% of these are successful. So you and your friends and family need to be okay that there's a 90% chance that they're going to end up with $0. And that can be hard. But when you're just getting started and you have some people who believe in you, this is definitely an option for some of your initial capital. So angels. Angels are professional investors that are individuals who invest in early stage companies. So these are a good fit with, if you're still in the beginning, it's good to have some traction. It's really helpful if they're in the same industry or network. And this is where a lot of people start when they're raising money. They typically invest sort of $25,000, $50,000. If you're second time through, you can often get significantly more money. And this is where that networking slide really, you can lay the foundation to find these people. They're all over the place. There's tons of people from the Bay Area who actually come up here and have second homes. And there's a lot of people in the woodwork of Tahoe, but it really takes a lot of networking to get there. There are actually some formal groups in Tahoe. There's the Sierra Angels out of Incline Village. They actually have a formal application process. It's really helpful if you get a referral to get in there. I would say they're not quite idea stage investors. You need to be a little further along and have some traction or have something that's really unique. The Reno Angels down in Reno is another group. A great place to do research is on AngelList. It's actually basically a directory of all the angels that have chosen to put their names out there, but quite a few people have done that. And it's a great way to see how much money has been raised for different startups and things like that. So angels are sort of your professional individual investor that can help you raise some significant capital. So accelerators and incubators. So these are another option in your early stage. It's a competitive process to get into one of these incubators. The typical process is for a 25 up to kind of $250,000. They'll take 5 to 10-ish% of your company, and you'll spend 3 months going through sort of a boot camp to make progress, get your pitch dialed, and at the end, you're put in front of hundreds of professional angel investors, venture capitalists, and it's a great way to network, get some of that initial funding, get some expertise you may not have, and move the ball down the road. Like I said, it's really helpful to have sort of this validated idea. Maybe you've done some business, you've reached some milestones, you've got your key team involved, but it can be a really good alternative for you. There's one down in Reno that I'm not forgetting the name of right now. Is it Venture EV or?
The IoT one is
Yeah.
Innovation Center?
Yeah.
Yeah, they just finished their cohort and they're doing 2 of those per year.
Okay, so they're doing.
Repeat that, I don't know.
Yeah. So there's 2 cohorts down in Reno doing Internet of Things, but the 2 most popular ones is Techstars. They're out of Boulder and several other locations. For people in Tahoe, they just started a virtual cohort, so you could actually participate in Tahoe and apply with them, and I think you have to travel a couple of times. Sort of one of the most famous ones early on is Y Combinator, and it's down in the Bay Area, and from Airbnb on down, they've had tons of success stories out of there. But there's literally probably 50 to 100 across the U.S. that you could apply to. Yes?
How's that different from the angels?
So it's an entity that's going to invest in you, and typically you get a whole bunch of experts that you're kind of like going to school for 3 months, where you go through their program and they help you. So yeah, you get a little more resources and help with that.
Yeah, and we did, last June, I think, we did an entire Mountain Minds Monday about accelerators, and we had a panel of 3 people who had been through accelerators but are based in the Reno, Tahoe area. So you can go back and find that on the live stream.
Okay, awesome. Any more questions? All right. So venture capital, the people with piles of money. So venture capital, they are organizations that have raised a fund. They can be any amount, typically kind of 20 million on up. Some are billions of dollars. Depending on how much money they have, it sort of dictates what size of investment they can make. I put 1 million as sort of the baseline. There are some that invest earlier at smaller amounts. But typically they need to sort of invest a big amount to get a big enough piece of the pie to make their return. So venture capitalists, experts in this whole investment sphere, still on average only have 2 out of 10 successful if they're really good. So that means they need 2 investments to cover the 8 that they lost all their money on. So they're looking at the 50 to 100 to 1 return, so that if they put $3 million in you, they're going to get 300 million back. So because of this growth need, you really need to be a revenue generating business at this point. You need to know how you're getting your customers, and that's really important, because they want to look, all right, is this big enough? And if I just put money in and they just keep doing this or make a few minor tweaks, they're going to make money hand over fist. It's helpful to have your core team on board, and where there's some alignment, if they can offer either key relationships or key experience knowledge, that's where there's a good match. There's quite a few that have popped up in Reno just recently. This is mostly initiated by that EDON organization I was talking about. There's the Reno Seed Fund. So seed is sort of an early stage category for venture capitalists. There's Growth Ventures, which is a little later stage. Battleborn Venture. Osmond Ventures is another private venture firm. This is Kleiner Perkins. If you want to read more, they're one of the most successful venture firms in the Bay Area, which has invested in pretty much every major tech company you've heard about over the last 30 years. Venture capital is not for everyone. They often invest and try to get a large portion. They are going to encourage / force you to grow fast. So you may not retain control or ownership, but often they can provide either the capital or the resources to help you kind of hit that home run. So it's definitely a special category of investment, but there are plenty of options out there. This is primarily, I think, of the world's venture capital, like 70% is in the Bay Area. So we are not too far away, but there are other options out here. Some of the other options I mentioned on that slide that I'm not going to go into detail, but you can get an SBA loan. It's a small business loan. Different banks offer these. You need to have some sort of collateral to get one, but that's another small option for you. There's quite a few startups that offer purchase order financing. So if you're a business that has some sort of revenue coming in on a consistent basis, you can actually raise money against that. And then there's quite a few nonprofit and government grants. So some other tips from the trenches here. It usually takes at least 10 contacts to get one that's interested. I think I mentioned this before, it's really helpful to have a match on industry or interest. So you can waste a lot of time finding really qualified investors who just don't have the expertise or interest in your category. And once you get them to say yes, you need to expect at least another 90 days before you actually get that money in the bank. You have to be really persistent to get them to sign all the documents and cut that check. And it's just, I can't emphasize enough, as you pitch, integrating your questions into your deck is just going to save you a lot of time. We definitely have had a lot of meetings where we got hung up on a few things that if we just would have had that data in a slide, we would have gotten further down the road and been able to focus on more productive conversations. I'm not the most outgoing person. Thankfully, Ryan is on our team over there doing most of that. But really, you just have to be brave. It's hard to ask for money, but the worst they can say is no. And I've actually found is most people love entrepreneurs. You're trying to change the world one little product at a time or one little service at a time, and people are really genuinely interested in what you're doing and want to help. And if they do say no, you should always ask for a referral. We tried to run the math on this, but I would say a third to half of the people that we actually pitched were people we never knew and came from referrals. So always ask if there's someone else that might be interested. And that is it. Are there any questions?
So I'm going to start with a general question about your experience specifically raising over the last 3 years in Tahoe.
Yeah.
So tell us about how long it took and how much of it happened in Tahoe versus outside of Tahoe.
Okay. So it was a little under 3 years ago. But our first investor meeting, we had a tentative yes at Good Morning Truckee. We came in and pitched, and it probably took another 3 months to actually get the check in the bank. But we spent probably six to 9 months raising our initial tranche of capital. And we were pitching probably at least 5 to 10 people a week for almost that entire time period. We were going mostly with the angels in Lake Tahoe. It took us a while to hone what that right individual looked like. So Stomp Sessions is in sort of the sports and outdoor industry. You would think people in Tahoe love that. A lot of people do, but when it comes to investing, if they don't have experience, they don't always combine their passion with their investment. So it took us a while to find that right set of people. We went down to the Bay Area probably a handful of times. I think we went to LA a few times. We talked to bigger firms, and it was a lot of work. I think it took probably about 3 months to get kind of humming. And then once we did that, it was just sort of getting down and closing those people. We continued, we kind of reached our first set of milestones and then went out and raised a little more money as well. And I think we had a couple outside. I think we had a Chicago, a couple from the Midwest. But almost all our investors are in Tahoe or had a house in Tahoe.
So the ones who did not, did you find it was an advantage that you'd raised at home first? I mean, I hear that in Reno over and over again. You need to raise money locally before you can go ask for it elsewhere. Show that the local community believes in what you're doing.
Yeah, I would say that had a little bit to do with it. So we worked really hard on recruiting a bunch of athlete and advisory members, and all the founders had over 20 years experience in startups and relevant companies. So we, I think, raised initially a lot on the credibility of our experience and the advisory team and the athletes we brought on board. So you can't underestimate what a good team or partners or any sort of progress will help. So I think it was important to have been successful here, but I'm not sure that was the benchmark that people in the Bay Area were looking for.
Let's open it up to the floor for questions.
How big a group is the Sierra Angels, and what is it comprised of?
Yeah, I don't know their
expertise?
exact size. I think it's well over 100 people, and I'm blanking on exactly how much money they invest, but I think it's over a couple $100,000 at that kind of early stage. Once the idea has been validated, you're generating a little bit of revenue. In Incline Village, you have Billionaire Row with all sorts of really successful people from Silicon Valley. So it's some of those and some people you don't know, but people who are sort of interested and passionate about investing in local startups.
Hey, Dave, I was kind of wondering about your early valuation. How do you kind of go from that angel or that startup to giving some sense of valuation to the company in that battle of if it is, it isn't?
Yeah.
Just talk to your experience.
Right. So that's where sort of math meets art. The difficulty is if you get, let's say you get $100,000 and you have nothing. Like, is your company worth $100,000 and they own 100% of it? That's the investor view of the world. The entrepreneur is, I've put a lot of sweat and time into this, and I believe there's sort of some inherent value. There's actually quite a few resources online that can sort of map out what sort of milestones you have, and you can literally put some things into a spreadsheet. For us, personally, we decided to go that convertible note route because we thought we could accomplish a lot in that 2-year time period and then get some money and value ourselves then. But there's really no concrete way to value your company on day one. As you start trying to raise money year 2, 3 into your business, a lot of that's based on how you've performed. So if you're 2 years in and you're doing $1 million in revenue, people will give you a value on the multiple of your revenue. Usually 5 to 10 times is sort of that magic number once you have revenue. But in the early days, it's a lot of black magic.
Can you be more specific on like, what exactly your company is or what you do?
Yeah, so we provide lessons for outdoor sports. So we have in-person lessons, and we specifically, as opposed to sort of traditional lessons with regular coaches, we have professional athletes, everyone from X Game and Olympic medalists, all the way down to sort of local professionals. And the sports that we're working with right now are skiing, snowboarding, and skateboarding. But we plan on adding mountain biking and surfing soon. And so we provide in-person lessons and like one-on-ones or sort of camps and classes. And we're working on a product to provide virtual lessons where you can send a video of you performing that sport and get critique and feedback from these professional athletes. And then we also have tutorial videos that you can watch on your own.
When you were taking your pitch deck to angel investors, what did your app look like? Was it just like a basic version of your app that was already on a phone, or was it just a screen, pictures of it on your actual pitch deck?
So it depended on what point in time. Day one, it was Robert over there doing mock-ups of what it was going to look like. So we raised enough money to actually go build it with just mock-ups, but we had done all the research, had some partners who were interested, and had the key team on board. But we quickly built sort of that MVP product, so that in about it was like 6 or 8 weeks, I think, is what it took us to get the product functional. And then with that demo, that actually really helped us both close our partnerships with some of the ski resorts and parks and rec departments, as well as raise sort of the rest of that money. So when it's real, it's a little bit easier to convince people to give you some capital.
Hi there.
Hi.
Curious, so when you approach a venture capital or angel, do you have to kind of have your plan of what you propose to exchange in writing? Do you have?
No.
You just say, what do you want from me? Just take it.
Sort of. You're trying to. So having been on both sides, of that as an analyst, you're literally getting hundreds or maybe thousands of business plans coming at you. So you're sort of taking the pessimistic view of the world, and you're like, how can I stop reading this and find a reason not to invest in this company? And so really that first meeting, that first email, that first phone call, you're trying to convince them to give you 30 minutes of time. So you need to kind of have your elevator pitch where you have in less than a minute, you can convince someone that this is an interesting idea, that they should at least ask you more questions. And then when you get to that actual pitch, you're really trying to convince them that you, your team, your idea, and the progress you've made is worth digging into deeper and considering an investment. So you don't have to worry about the details of whether they're going to invest you, what form and format, till they've sort of approved that you're a good idea, and then they want to dig in deeper.
Do you get to, in the end, ultimately, do you get to lay down the terms?
So you get to lay down the terms if you have multiple options. If you have one option, they dictate the terms.
Cool. Fair.
You mentioned a pretty wide ranging ways to find different angel investors, from AngelList to Rotary Club. Did you guys have 2 or 3 different ways of finding angel investors that seem to pay off more than others?
getting in the right network of people. So cold emailing probably anybody is going to end up with no response. They're just busy people, and they really don't want to waste their time. So it's finding if you can get an advisor or someone that you're working in a co-working space, or someone that just has one connection with someone who's a professional investor, that's going to get you through the door, and it's really those individuals that can really connect you. So we've worked in the Bay Area. We had some connections, but we've just sort of networked our way through our networks to identify these different people. And you will find that maybe 4 or 5 people might give you 90% of your really good leads.
How did you know this was something you were passionate about?
Pardon me?
How did you know this was something you were very passionate about? This was kind of a good connection of a bunch of different passions of mine. I've always been interested and enjoy the outdoors. I'm a big sort of problem solver and like to use technology, and really sort of the altruistic part of Stomp Sessions is we're helping people get better in outdoor sports so that they actually participate and are healthy and can really enjoy the outdoors longer. And the combination of all that really was something that just resonated with me.
So here's a question coming in online from our live stream folks, which is related to what you just said. The question is, can Dave speak to venture versus impact capital raising?
I could speak a little bit about that. So venture capital is mostly just based on the return. Impact investing, it looks at both the financial return as well as maybe the environmental or societal impact. So there is a sort of subset of, I'm not sure I'd call them venture investors, but impact investors that look on, are you solving some climate issue or societal imbalance issue? And yeah, that's a new area that if your business fits that model, there's a whole slew of impact investors, which is pretty cool.
Yeah, Dave, quick question on use of proceeds.
Yeah.
And during the fundraising process, I'm curious if during your pitch you're talking about using proceeds to basically pay yourself during that next development stage, or use it to get additional assets to basically accelerate the business.
Yeah, so we did a little bit of both. So we decided at this stage in our life we didn't want to work for free. So we had a reduced salary, but we paid ourselves. But we also had done the work on our business plan to know how much money it's going to cost to develop, market, develop some of these partnerships, go into different areas, and we raised money to cover that as well.
Well, there's actually several other people in the room who've raised money, so if you want to hang out and chat afterwards, I can direct you to which ones I know who've done that. There's 2 parts to this raising money in Tahoe, right? There's deal flow of people who want to raise money, and then there's got to be people who are wanting to invest money. So a few things. We have here in Truckee a program of the Chamber of Commerce called Truckee Tomorrow, and one of the projects is building our entrepreneurial ecosystem. So I'd encourage those of you who are interested in that to get involved, and one of the things that's likely to come out of that is building an angel network here in Truckee. Another thing is, if you're wanting to learn about how to become an angel investor, there is an event going on down in Reno, the Reno Venture Conference, tomorrow and the next day, and there's the ability to participate in some or all of that. So that was a chance to think of more questions. Any more questions before we let Dave go?
You had mentioned a database in which all of the pitch decks are housed. Where can we find those?
Let me actually, slidebean.com. It's awesome. It literally has every single
pitch deck of every company. They've actually redesigned a lot of them to make them look really good. It's a great, great resource. So yeah, I've got stuff on bootstrapping and accelerators and different things here. Oops.
I have another question. What about finding talent or skill sets that you don't have yourself?
So,
negotiate?
continue.
Yeah.
Okay. So we were fortunate. We were kind of the three-legged stool. We had someone who was really good at sales and had the athlete experience, someone who was really good at design, and someone who could do the technology. So we most of what we needed to get going, we had. We did use contractors from time to time, so I would encourage you to find a consultant or a contractor to fill in those gaps, so you don't have to hire them full-time right away until you know you need them. Finding people right now, almost anywhere, especially in Tahoe, is really hard. So I would kind of encourage you to try to network and find someone to join the journey with you. Having done the solo entrepreneur versus the co-founder route, I personally think it's much more enjoyable to share your pain and success with other people than taking it all yourself. But that's sort of a challenge. I think doing this networking, hitting all these different groups, you're actually going to probably run across a lot of the people that you would need or might want to be co-founders with. So I think networking is sort of the key to getting that initial set of people.
So do you recommend, would you prefer an investor that also had a skill set that you could incorporate versus just investment money? Is that a gem over anything else?
Yeah, without a doubt. There's, I don't know, they call it dumb money and smart money. So dumb money is someone who's going to give you money and you're going to do all the things you can do with it. Smart money actually gives you money plus connections, resources, expertise. It's infinitely more valuable to have less money and a really smart person than a lot of money and no help on the side.
All right, with that, let's give a round of applause to Dave, and thank you. We look forward to seeing you the second Monday of June when we'll have Jerry Blackwell talking about locomotive technology. So until next month.